This thing called meme scope, you can catch some really, really big coins early.
He's a genius, doesn't leave his room.
God made a mistake, burn it all down, start over. Some people like to spot shorts and they're good at it, but you really can't only do shorts because, in my opinion, you lose your perspective. Like the short community was really big into Tesla, for example. Most profits, best Sharpe ratio. I mean, how else do you think other people quantify investors? Yeah, so the short seller community for Tesla was just so wrong and so bad. I don't think Palantir, I don't like to short good companies. But there are good short sellers who are more even-handed. I mean, Tiger Global, obviously the bubble had them losing a little bit, but Coatue. I mean, Stevie's firm, Citadel, there's plenty of good short sellers out there. Yeah, I mean, look, Palantir's probably going to get cut in half at some point. And it's still a great company. Same thing with NVIDIA. Still a great company. It doesn't mean it's going to happen tomorrow. It doesn't mean you can predict exactly when it's going to happen. But most people who have been around feel the 2000 vibes here. This feels just like 2000. Anything can start the end of the bubble. It's probably not this quarter, but it could be, a quarter or two from now or something like that. And it could be wrong. Julian Robertson did not blow up and he did not go bankrupt. Come on, see. He closed his fund. He didn't go bankrupt. Jesus Christ. He's one of the richest guys in the world. Rest in peace. I think NVIDIA will get cut in half probably at some point, but it could be getting cut in half from 150 or from 190. He did have bad performance and he closed down, and that's what created all the Tiger Cubs. But he basically just retired. I mean, he was an old guy anyway. There's a lot of good biotech PMs. That's one of them. I'm very close to that space, so I probably don't want to speak on specific people. But I think that in biotech, short selling is just critical. It's hard to short with scale. A $5-10 billion fund, it's kind of hard to short with. And then most of the companies that are big, you end up getting good management. And that's kind of the problem with shorting S&P 500 in general. Because if you short the S&P 500 or stocks in the S&P 500, they're mostly well-run companies. And in the long run, they're going to compound. You got to find like some Carvana or some like crazy bubble or some crazy company that's cooking the books or like something. But like if you look at biotech, almost every one of these biotech companies that was a $5 billion company or whatever 5 or 10 years ago, they ended up compounding and working themselves out. Even something like Biogen, which was kind of a dog company, BioMarin, like all these companies have slowly gone up over time. Not many have stayed stagnant. Like it's just the nature of good management. You could probably find a couple of dogs, but in general, that's the nature of a lot of these stocks. So shorting should really be reserved. And I learned this the hard way. I used to try to short some of the larger companies. And, occasionally I was successful, but shorting is really good when you're short bubbles or frauds or companies with zero intrinsic value. Shorting something like Palantir because it's overvalued. I'm not saying you can't make money. You could, but it's really not a great way to make money. Because ultimately what you're really shorting is beta. And you are trying to short. If you're shorting Palantir, you're basically shorting beta. Where's your alpha really coming from? And you can just go short 3x or 5x or 7x, whatever you want, the SPY, and you're basically going to have the same performance as Palantir. If you're not getting alpha factor, I don't know what you're really going to get out of shorting a good company. So you're not really getting alpha. You're just going to get mostly beta. Now you might get bubble, which is a factor, but why short? Let's take some components here, okay? So let's just think about it this way. Beta is kind of your easiest component. This is, say for Palantir, I would say this is going to be 30%. Say it's 35% of its move. The alpha is 35%. This is good. This is kind of the company's a great outperformer, et cetera. And then you sort of have two factors. So you have an AI factor and just sort of a bubble. And so basically, to replicate the price of Palantir, this is what you have to do. You could make a synthetic Palantir by just taking the SPY, an index of AI companies, and an index of momentum companies, like Rigetti or Bitcoin or something. This is the part you can't replicate, right? This is sort of their alpha. They have outperformance. So this part you're never going to be able to diversify away or synthetically create. So if you short Palantir, all you're basically doing is shorting this stuff. Most of your trade is short this, except you're adding in like, okay, I'm also betting against pretty good management and stuff like that. Now, it's probably going to still go down at some point because this stuff is overwhelming. You know, SPY has a bad year because it's had tons of good years. AI's been a bubble. Bubble has been a bubble. Now, if you do IonQ, it's largely similar, but let's try to think about what are the factors that make up IonQ. The first is, like all, is beta, which again, you know, we can't predict. I would say it's 50% here. And so this is, you know, basically you're just trading SPY on a certain leverage. Then you have alpha, and I would say the alpha, this is really interesting for a company like IonQ or Rigetti, is basically zero. There is no alpha. There's nothing their business can do or not do that makes a difference, which is why this is such an interesting trade. You know, the people at IonQ, the work they're doing, it's irrelevant. It means nothing. Then you have the quantum computing component, you know, which I don't know, we'll add another 30% or something. And we'll just say momentum in general is 20%. So when you short IonQ, I mean, you could basically replicate IonQ via shorting the SPY, shorting momentum stocks like Palantir or Bitcoin or NVIDIA or whatever, and then shorting a basket of QC stocks. You actually don't need IonQ. You could just short Rigetti, D-Wave. You know, you could even short companies that have nothing to do with quantum, like QMCO. And that's basically, you know, the same thing. So, you know, obviously things always change, right? This is kind of what I view as the intrinsic nature of this market. Now, if all of a sudden, you know, IonQ is profitable and their revenue triples, different story. Or they have a breakthrough in manufacturing or something, you know, higher fidelity gates, yeah. But then alpha will become more important and the beta will drop and you'll have to deal with that accordingly. It's not retrospective because what I'm doing is trying to guess what are the underlying dynamics of these stocks. And you can tell that the people that own IonQ, they own it because it's gone up. And the people that they also own it because it's part of a trendy sector. Now, we don't know what the future holds, but that's sort of the current state of affairs. And you have to guesstimate that. That's a trader's instinct and also empirical. I mean, you can call people and ask around. You can go read the message boards and see what these people are saying and thinking. I think that you can short beta, which isn't my favorite thing to do, but if the market's really expensive, you can short beta and then you can short bubbles. And you just try not to make alpha bet that's wrong, and the rest should work out. I don't mind being short a little beta, because remember, when I'm long a stock, I'm long beta. So the beta in your portfolio should hedge out, and then you're just trading alpha and whatever other sector factors or geographical factors or risk factors exist. I know Palo Alto stoned. I dealt with those guys. We didn't have necessarily have a good relationship. I'd get out of that fund. It's not a good fund. Pretty risk averse. Kind of stable. You're better off buying SPY, to be honest. But value investing in bonds are probably the place to go now. I mean, the market's had its big run. Okay, you want me to look at PayPal maybe? PayPal reported. This is a product called Godel. We made this ourselves. Buy us for us. It's sort of a Bloomberg clone, but we're going to try to do a better job than Bloomberg. FUBU, for us, by us. Yeah, I don't know if interest rates are going to drop. But if we get government spending down and deficits down, that's pretty bullish for bonds, I think. Merck had a very interesting situation. They reported earnings. Everything's fine except for a drug called Gardasil. Now, I know Gardasil really well. It's going to be just fine in the long run. And the actual value of Gardasil to Merck
Autofilled.
is not, I think all of Merck, I think Gardasil is probably worth 10%. And the only thing that's really happening with Gardasil is there's some problem with Gardasil in China. Now, China is a big market, but it's not all of Gardasil. If tomorrow Merck had to shut down Gardasil, I think it would be down 10%. So it's, a little bit overdone here.
Autofilled.
Yeah, GRHS, the market doesn't believe it. It's unfortunate. I believe it. Yeah, I'm not sure what, maybe it's worth 20%, but Gardasil China is not worth 10% of the company. No way, no how. Gardasil China is 2 to 3 billion. So, and at this point, it's completely out of the stock. I mean, it's already was a weak stock because of this exact issue. Keytruda's a little, they got to figure out, it's going to be a pretty hard landing for Merck. Yeah, most drug companies do offerings after data. But if the offering was well received by Wall Street, they would have bid the stock up. Nobody bought this offering.
You turn $100 to $1 million. Now, how do you do that without scamming?
Basically, you stare at this thing called, there's this thing called meme scope, and people are making new coins all day. And so if you stare at it all day and you just keep practicing that, you can catch some really, really big coins early. Sometimes these coins go really, really high. So in that instance, I think I bought a coin at like 150K market cap and it went to 120 million on the same day.
From my perspective?
Yeah.
He doesn't leave the desk.
He's a genius, doesn't leave his room.
God made a mistake. Burn it all down. Start over. I don't think I could be on the board of a publicly traded company at the moment. Not that I'd want to be either. But I could put somebody on the board. This is my representative and Nibbles. So Rando I met in a chat room. Oh yeah, I've been in medical devices for a long time. Some of my best investments, believe it or not. I just wish I had bigger size in the space. But yeah, no, I'm also legally free to do whatever I want in medical devices globally. Pharma is a little more complicated. I'm not a big fan of that Monopar drug. Anybody could have had that drug for $1 million. There's a reason nobody wants it. I don't know what these guys are thinking. Wilson's disease is just not something that needs another treatment. I was going to buy the Wilson's disease current drugs from Valiant, and then Valiant raised the prices instead of me, but they were going to let me do it. It was cool. Man, that would have pissed off AOC. Imagine telling a company that they can't price their product where they see fit. Could you know, what kind of arrogance you have to do that? Nah, I tell you what price you can have. Yeah, I mean, PayPal's well known that they're doing a stablecoin. I'm not sure. One, they're late to the party. They should have done it already. So I don't know how they're going to grow total payment volume. It's already pretty big. What are they doing? 400 billion a quarter in payment volume? 1.2 trillion? I mean, they basically have a 1.6 trillion. They basically have a decent chunk of GDP on PayPal. They basically can't grow. Yeah, they could do other businesses. Stablecoin's a good idea. They should have seen stablecoins coming from a mile away, though. Makes me question management's judgment there. And management's judgment is extremely important when evaluating a stock. Some people say it's the only thing that's important. I really want to turn you guys on to that style of investing because I think you guys think I'm just a value guy and there's no other analysis that I do. But one of the most important things is grading management. And if you look really closely in my models, you'll see sometimes I actually give a report card. And it's one of the hardest things to do. No, you grade them on what they've done. So you actually just grade their moves. Yeah, so basically read any acquisition they've done, any strategic initiative, and you basically say, okay, was this a good move or a bad move? You know, the job of a company is to deploy capital into high return endeavors. And if they do that, And you see that they're destroying value every time they do it. It's not going to be a great returning company. Now, the problem is there's a lot of homeostasis. A company has a bad enough management team, they'll get rid of the management team. Okay, so cash flow from operations, 7.5 bill. Okay, so PayPal's around 10 times earnings. That's not bad. Value stock, if I ever saw one. Yeah, PayPal. PayPal, pretty exciting. Who wants to buy some with me? Who wants to buy?
Order filled.
We are long PayPal, small amount. PayPal, Merck, I mean, these are real decent companies. Real American companies. Fartcoin, Pepe, Peanut, Melania. These are meme coins. I had the max leverage of 51, but I don't use 51% leverage. I mean, you can adjust the sliders, but I try not to use leverage at all. Sometimes I'll go on a little bit of a limb, but you don't want to be leveraged in a very volatile instrument. I mean, that's gambling. You want to get rid of anything that looks like gambling when you invest. Or at least have your gambling evenly distributed. So your good luck and your bad luck kind of offset each other. Yeah, I mean, 3x MicroStrategy probably, I mean, it obviously increases your variance, but it's probably not that bad. But it basically traded like a meme coin that day. Yeah, that doesn't make sense, Nick, because I mean, if the company is basically breaking even, their PE would be close to infinity. So that's not the right way to look at that. I haven't looked at Oklo yet. I mean, I don't know how much value I can add to an energy thing, but I can try. You want me to try? And Flocky has to be the best short in the meme coin space. I guess Merck makes vaccines, so RFK is going to hurt them. It's going to make them pay. Yeah, so second derivative of revenue is growing, 36% revenue growth. Cool. Why don't you have it make me a Palantir spreadsheet and send it to me? And if it's a good spreadsheet, I'll pay you $5,000. Martin@martinshkreli.com. What are the details? What do you mean, what are the details? I thought I want a Palantir model. Can't be that hard. I mean, look at me doing it. I'm just pressing some buttons. Surely the machine has the experience. It looks so easy. If only I knew how to program, that would be really convenient. Oh no, you'd have to record a video of the machine doing it. I'm not gonna fall for that. I'm a big fan of OpenAI. Huge. I was one of the first accelerationist founding fathers. Okay, so cash flow. People are looking at earnings for Palantir. That doesn't make any sense. You got to look at cash flow from operations. And their last quarter of cash flow from operations times 4, 121 times earnings. Now assume this grows, I don't know, 50% twice. You're talking about 50 times earnings. It just quadrupled, so it very easily may. What's their guidance? They're guiding at 36%. They'll probably do better than that, right? So let's see if we can translate. It looks like they're flat. Well, one way we could do it is say, okay, what's their cash flow from operations margin on revenue? And it says 56%. So you can basically just say, okay, well, what's 56% of that? And that's next quarter. That's 480. And let's assume they kind of keep growing at that rate. What was guidance again? $858, and then they said 3.74. Okay. So they're giving cash flow guidance. So it was 1154. And they are saying it's going to be well, they always beat, so I'd say 1.8. And let's say year over year. Oh, favorite Shakespeare, The Tempest. I love Shakespeare. And why don't people make meme coins about cool things like that, like Shakespeare? Shakespeare coin. Like Shakespeare will be around. You know what I mean? He's been around 400 years. He's keeping attention. I mean, we'll probably do some kind of Godel coin at some point. But it looks like in 2025, you got to look forward looking. They'll do about $4 billion in revenue. It's almost all profit. So 250 billion market cap. IonQ's revenue is sort of made up and very small, so it's all come from one or two grants, and those grants are really like circular. Well, Chuz, you could DM me nowadays, so just DM me on Godel. It's probably bearish for meme coins because, like, to the extent the government wants to allow more crypto in the U.S., well, you could sell your meme coins and buy real things. Yeah, a lot of people in crypto blame regulations for meme coins because it leaves a vacuum where only, is allowed to exist. I was talking to a crypto friend, major crypto fund, one of the biggest, and he was just like, yeah, you're safer doing a meme coin. I think the Merc trade is how the big money in hedge funds are made. Some of these large caps, you can put 200 million in, make 5% in a month. That's a pretty good return. I'm not a big leap guy. I just do the common if I'm going to do a leap. I don't like options in general. It's not investing. Kind of a gambler's tool or a serious risk management tool. Yeah, loss amplification tool. I like that. AMD is Advanced Money Destroyer. I don't know that Merc will be up eventually. If I knew, that'd be cool if I knew. When's Uber reporting?